New numbers now show fewer jobs were added last month than expected. Joining us now, Chase Wilsey from Wilsey Asset Management with how the markets are responding. Chase, thank God you're here, because I can't keep track of anything. What industries were hit the hardest and what's going on?
Yeah, I mean, we did see 22,000 jobs added last month, and that was well below the estimate of 75,000. The other big concern was there was a downward revision of about 21,000 jobs to the prior 2 months. I mean, the industries that were strong were healthcare and social assistance. Those two categories alone added about 47,000. I'll tell you the scary part, 22,000 minus 47,000. There's a lot of industries that struggled. I will say the other industry that surprised me that did well, though, was leisure and hospitality. That added like 28,000. Generally, in a weak economy, people aren't going to the restaurants, they're not eating out, so you're not going to need to staff up. So it's kind of a mixed bag, I would say, of numbers that I saw.
How do those numbers impact the markets? Because we've seen it. A couple of numbers come out, the markets go down. You mentioned revisions, and then people getting fired in charge of giving us the numbers, and then the numbers go way down, way up. What are we to believe at this point?
You know, it's really challenging, to be honest. I mean, we did see yesterday a downward revision for the 12-month period that ended March 2025, about 911,000. And I got to say, I mean, I think they need to change the way they're doing this monthly data. It's about a survey of 121,000 companies. You're not getting complete data reports. People aren't responding to the survey. So I don't want to say you don't want to trust the numbers, but I mean, to go from a 12-month average, about 147,000 jobs a month, to now 70,000 jobs, the labor market was definitely a lot weaker than many people anticipated. Now, the impact it has on the market, it's kind of funny. I mean, I'm going to say somewhat positive, because now this fuels the idea that we'll get Fed rate cuts. I mean, it's pretty much guaranteed we're going to get a Fed rate cut this month, and the stock market likes to see that as interest rates are dropping.
And it's weird that you mentioned the rate cuts might be coming, everybody wants them, and then all of a sudden there's a little uptick in some positive news. And they're like, oh no, that's going to delay now the cuts. Is that something that could happen?
I mean, it's absolutely positive, potential situation that could happen. I mean, because right now there's two mandates that the Fed has. They have the labor market and they have inflation. Well, we got PPI numbers today. They were decent. I mean, much better than anticipated. We get CPI tomorrow. I mean, if CPI were to come in way hot, way more elevated than anticipated, that could reduce the likelihood that the Fed will cut rates. I think this month is pretty much set in stone, but there is speculation now we'll get 3 cuts by the end of the year. If inflation is hot, maybe it's only 1, 2 cuts. I mean, it's going to be a dynamic game that we have to follow.
And we're going to stay on top of that with your help, of course. Chase Wilsey, we thank you again for the analysis. Very important, because, you know, I don't know. Listen, I don't know. Thank God you're here. We'll be right back.